Hi everyone, thanks for joining us for this session titled Riding Indonesia's Mega Digital Opportunity Wave. My name is Shotaro Tani. I'm an Indonesia correspondent for Nikkei Asia. With me are three distinguished panelists: Min, President Southeast Asia of JD.com, Sachin Bhanot, Head of Southeast Asia Investments of Prosus Ventures, and Aaron Tan, Founder and Group CEO of Carro. Before we start, just a reminder for the listeners, please post your questions in the Q&A box, not the chat box, and I'll be trying to take a couple of questions towards the end of the panel. So let's just start off by just a quick introduction of you guys. Sachin, why don't you go first?
Yeah, sure. Thanks so much for that, Shotaro. I guess I'll give a brief introduction of myself. I'm born and bred in Malaysia. I've spent most of my career here in Southeast Asia. I started in banking, and then I worked in a private equity fund, mid-market private equity fund for close to 6 years, and then I moved to the exciting world of venture in 2019. And most recently joined Prosus to help lead their ventures efforts here in Southeast Asia in January. And Prosus is really a permanent capital vehicle. We invest from our balance sheet. And by virtue of that, we sort of take an extremely long-term and patient capital approach to investing. You can think of us when we invest as being investors to hold. We like to go in early, and we like to sort of double and triple down all the way through to a company's exit, be it a strategic sale or an IPO. From a sector standpoint, the ventures team is pretty agnostic. We sort of tend to zero in on sectors in which we feel technology can sort of drive massive societal needs. And we are also stage agnostic. We obviously deploy ticket sizes based on market dynamics and what makes sense for the regions in which we invest in. The sort of journey in Southeast Asia is a fairly new one, but we've been fairly active over the last few months. I guess I'll allude to that, in more detail when we speak later on. But that's really us in a nutshell.
Got it. Thanks a lot. Moving on to Aaron. Apologies to the listeners. He is there, but he's currently quarantining in Shanghai with a very unstable internet connection. So we'd have to turn off his camera to save bandwidth. But Aaron, a little bit about yourself and the company.
Yes, sir. So thanks, Shotaro, for having me today. So hi, everybody. My name is Aaron, founder and CEO of Carro. Southeast Asia's largest marketplace for cars, right? So today, as a company, we are present in Indonesia, Thailand, Malaysia, Singapore. By extension, we have engineering offices in China and Vietnam as well. The company is about 1,700 strong now. Every year, the company transacts more than 150,000 vehicles annually right now today. And we are super excited because we just raised a fairly sizable round from Vision Fund just a couple months ago. And so looking to expand deeper in each of the markets that we are in today. Now, if you remember anything about us today, at the end of the day, I always say, and I always summarize the companies in just 3 simple words, right? We are basically Amazon.com for cars today. But since Meng is on the call today, I would say that we aspire to be JD.com for cars. I think that's all we think about life. But yeah, over to Meng.
Yep. Last but not least, Meng.
Yeah, no, thank you. Hi, good morning, good afternoon, everyone. Thank you for the opportunity to share about Indonesia growth. I look after the Southeast Asia region for JD.com. We have a joint venture in Thailand called JD Central. We also have operating business in Indonesia, JD.ID, which our shareholder actually include Bhanot and Provident. And we also have investment in Tiki and Pomelo, where they are all. Tiki is an e-commerce company in Vietnam, one of the largest local e-commerce, and then Pomelo is a fashion e-commerce. More importantly, in Indonesia, we are very committed to the growth. I think 3 years ago, we also invested into Gojek then, before the merger. And I had the fortunate experience to sit on the board for a period of time. And I would love to also share the perspective. So looking forward to the conversation. Thank you.
Great, thanks a lot, guys. Let me just start by outlining some of the reasons why Indonesia is an attractive market for startups and investors. So it's got the largest population in Southeast Asia, obviously, with 70% of its 270 million population using internet on a daily basis. Smartphone penetration has been rising. It's full of tech-savvy youth population. It's been posting 5% annual GDP growth pre-pandemic. Last year, it was negative growth, but before the pandemic, it was growing healthily. And as such, the famed Google-Temasek and Bain report reckons that the internet economy in the country will reach 124 billion in 2025, by far the largest in the region. So moving on to the discussions, if I can start off with Sachin, is there anything specific about Indonesia other than the macro factors that I just outlined that really interests Prosus in terms of investing in Indonesia? Sachin, you're on mute.
Sorry about that. Thanks for that, Shotaro. There's quite a bit to cover here, perhaps I'll start by just saying that, look, Indonesia today presents an extremely compelling consumer-led tech story, right? It's you can think of it as a country experiencing growth on growth, driven by both the macro and tech tailwinds that you alluded to earlier. It's a country with scale, as you mentioned, massive population. One thing I would add to that is there is a demographic dividend as well. So it's a millennials economy with a median age of less than 30 years old. And the growth of the economy has really been driven by strong consumer expenditure, right, which accounts for about 60% of GDP. And on the tech side, like you mentioned, internet penetration has gone up. What's exciting about Indonesia, it's a mobile-first tech economy. So 90% of internet users are using it as their primary device. And Indonesians are using around 4.5 hours of mobile internet a day, right? That's ahead of markets like the US and China. And the size of the internet economy has consistently been underestimated, right, throughout the years. And I think from a tech perspective, the country really has a unique advantage, and that is having the benefit of hindsight. So depending on the specific sector, it's either 3 to 5 or 7 years behind that of markets like China and India and the US. And obviously, it's catching up very quickly. Therefore, it's, founders are always in a unique position to pattern match from these countries, though, of course, these business models have to be adapted to local nuances, right? That being said, there is still a lot of low-hanging fruit and market inefficiencies. So there are large segments of the population which still don't have consistent primary access to goods and education and financial services. And all this is further exacerbated by infrastructure, inefficient supply chains, which really makes the country ripe for disruption, right? And so against that backdrop, as a firm, we've sort of been zeroing in on sectors in Indonesia where technology can really help bridge these gaps and solve for massive societal needs, right? So our first investment was in the logistics space, and take logistics in Indonesia, right? It still amounts to 25% of GDP. The pain points are very real in tier 2 and tier 3 cities. I'm sure Meng will be able to elaborate much deeper on that. It's a topography with 17,000 islands. There are lack of formal addresses, still cash on delivery. And so our first investment we made in Indonesia was in a company called Shipper, which is really building a 4PL aggregation network to sort of help online sellers with scalable fulfillment and reliable shipping services, right? We've also looked at other sectors, and we recently made a play in the digital wealth management space with Pivot and StockBit, a company that is democratizing access to mutual funds and stocks for retail investors in the country, right? Again, extremely low penetration. Only something like 1 to 2% of Indonesians have a registered stock account. It's a very high saving rate society. 60% of financial wealth is locked up in deposits. And you've had large segments of the population that have been underserved, right? Because incumbents tend to target high net worth individuals. While the first gen B2C e-commerce segment is well defined and you have extremely large and competitive players like Shopee and JD and Tokopedia, we've been spending our time in more underpenetrated and fragmented sectors such as B2B commerce and agri-tech. So, we invested recently in a company called Aruna, and they are really revolutionizing Indonesia's fisheries and marine supply chain, which has been largely untapped for decades, right? And this is despite Indonesia being the world's second largest fisheries producer with over 3 million fishermen in the country. And in fact, we just recently closed on another investment called ULA, which is aiming to digitize Indonesia's traditional retail industry. And the backbone of that is 6 million mom and pop stores, which contribute about 85% of the country's nearly $400 billion retail market. So in essence, Shotaro, there's a lot to do in Indonesia. And I would say that, there are many sectors today which are still very nascent and are ripe for disruption. And what I would say is that you've had COVID, and obviously there's been a lot of, there's been a lot of pain due to COVID in markets like Indonesia and globally. But what COVID has been is a rapid accelerator for tech adoption in the country. So, there are many examples that stand out, right? For one, 56% of new digital consumers in Indonesia came from non-metro areas in 2020, which is massive. Over 90% of new digital consumers intend to use at least one digital service post-COVID. And if you look at things like digital payments, e-wallet shares of total payments has increased by nearly 50%. And in parallel, you have a maturing tech ecosystem in the country that has yielded some very interesting trends. And the elephant in the room has always been around the exit environment. And now you're seeing these blockbuster exits, right? With the IPOs of Bukalapak and soon GoTo and Traveloka. And by virtue of that, more later stage investors are going to be excited, more excited about investing in the country. And the second trend is really the rise of talent pools, right? You're seeing, the emergence of second-time founders. You're seeing foreign founders set up businesses in Indonesia, and you're seeing founders emerge from the ecosystems of large local tech players like Gojek and Tokopedia, right? Which makes the market a lot more investable. So I think if you take a long-term approach like we do as a firm, I think there is a lot to be optimistic and a lot to be excited about when it comes to Indonesia. I'll just stop now, guys.
Got it. Thanks for that elevator pitch. Aaron, going to you next. Sachin mentioned, Indonesia still has a lot of nascent markets ripe for disruptions. Was that something you considered when you expanded into Indonesia, which is now one of your largest markets?
Yeah, no, thanks. So the way, first of all, I think I'm always very sensitive to the word disruption, because I like to think that, we are not really disrupting per se. We are trying to better the ecosystem. We are trying to better people's lives, be it in e-commerce or whatever not that we do. So, I'm in that sense sensitive to that word, because the last time we tried to use the word disruption, we got into quite a bit of trouble with the media and the whole ecosystem, so to speak. So no, we are not disrupting anybody. We are really here to be good partners and to provide a better user experience, so to speak, right? So I'm coming back to ourselves. Again, we are basically a marketplace for cars, by far the largest in Southeast Asia. And like I said, we do about 100,000 units annually right now, right? As a company itself. And that's pretty sizable, right? But what drew us into the space to begin with about 5 years ago as a company was really the low penetration rate of vehicles across Southeast Asia. Now, if we look at Southeast Asia as a whole, we're talking about 6.8% penetration of vehicles, yeah. So, i.e., vehicles per capita in that sense. Out of 650 million people, only 6.8% of them has a vehicle in that sense. And if we compare this number to, say, a developed market, like, say, in the United States, it's closer to 80-90%. On a per capita standpoint. And then if you look at Europe itself, it's also about almost 50% thereabouts. And which basically spells out in a place like Indonesia, with 270 million people plus per capita penetration of about, say, today it's about 7.something percent, 7%, I believe. And when we started, it was closer to 6%. You can understand why the excitement in the space by itself, given number one, that there is a lot of push. There's going to be more demand. There's no questions with the rising middle class, so to speak. Every year, Indonesia, if I remember my numbers correctly, adds about 20 million new people into the middle class itself, right? So that itself was a super interesting opportunity for us. Plus, the global tailwinds. At 2015, 2016, I was basically based in the venture fund in the United States. at a point in time, luckily, I met all kinds of automotive companies, right? I met BP in its early days. I met DriveShift. I met, actually, more interestingly enough, I met Uber. I met Tesla. A whole bunch of companies there in the automotive sectors. And I echo what Sachin mentioned, right? Which is there's a lot of opportunities left in every single vertical. And what I saw was the interesting opportunity in the automotive vertical by itself, whereby not only are we talking about trading itself, but the neighborhoods that we play in and the tailwind that we are seeing is very strong, right? Every time, because we are a marketplace, every time when there is liquidity events, i.e. whenever someone wants to sell his combustion engine vehicles for a new EV, for instance, electric vehicle for us, this is good for us as a platform, right? Because we stand to gain whenever there is liquidity and stuff like that. And for us, it is to find that older vehicle a second home for itself. And so, with this right intersection in space and the right tailwind, and also the very fact that the automotive industry in any of the markets itself is a very good portion of the GDP, and by itself is a $1 trillion vertical. It makes it a super interesting opportunity for us to explore this, especially in a place like Indonesia, where there is so much demand potential. There is also a lot of rising middle class. There is also a good need for credit and stuff and whatnot. Plus, if you think about this, one of the best things that we thrive on is the fact that there is a lack of consumer trust in the market, and you cannot portray the better than in a place like Indonesia or even in Thailand, where we are also fairly sizable. Because in these markets, when there is a lack of trust, it does give us as a platform company for automotive that opportunity, because it is very hard to find a trusted platform / marketplace, or even a dealer, an offline dealer, if you want to buy a vehicle, even in Indonesia, right? Because you do not know who to trust. And so for us, it is for the taking, because the market is good. The market structurally makes sense, and I think the tailwind is very, very strong. And that was the reason why we thought that Indonesia was really a good market for us to enter. Yeah.
Can you just briefly explain about the EV that you just touched upon? Indonesia is obviously trying to become an EV hub. It's going to put in some regulations that are going to put more EVs on the road. If we suppose we see a tighter EV regulation with regards to EV, something like petrol cars won't be allowed by say 2030, 2040. What kind of impact will that have on Carro going forward?
Yeah, so I generally don't think that would be that kind of blanket statements. If there is, it's going to put Toyota at stress on this, right? Primarily because the EV cars are coming, but they are still not done yet. I do not think that the government will put the kind of blanket restrictions that we made, but they might do some tax, rebates, incentives, and to get people to adopt EVs and stuff. Funny you ask this question, because literally I just spoke with, I shall not name them, but one of the Chinese OEMs. I just spoke with them, and then they were talking about pushing off this bunch of EVs into Indonesia. They are setting up factories down there. I think it is high up in the government's agenda to push for EVs, primarily because of the fact that Indonesia is a great place to mine. I think it was lithium, right, and some of the ores by itself. So which makes it a very good hub to be a battery hub by itself, and as a result, an EV hub. So I think all said and done, the government would definitely, without doubt, and anyway, they have already shown hands in the sense that they were pushing for this. But I fundamentally think that they will not do such a blanket statement whereby no combustion engine cars and stuff like that. I think there will be other implications with regards to that, right? Because you can imagine the other OEMs will not be too happy about that. Part two, I think that the infrastructure in Indonesia still needs a bit of time, right? So I feel personally EVs is not something that is on the horizon in the next 3 to 5 years. I feel that they will take a generation of change for the infrastructure to be up first, followed by the need of the consumers and stuff. And lastly, I would add that I would think that in Indonesia we will see EVs a lot more in the logistical section, in the B2B sections, and I think maybe JD will have more to add on that kind of things, which is we are seeing a lot more on EVs in commercial logistics usage.
Got it. Thanks a lot, and thanks for your patience, Seemin. I want to ask you about the pandemic. because it's basically thrown Indonesia's economy into tatters. But one of the sectors that came out strong was obviously the tech sector, where you have more people using e-commerce, more people using food deliveries, more people using just digital service in general. So JD.ID, one of the biggest e-commerce companies in in Indonesia, Gojek. You used to be, I think, on the board of commissioners. Can you just, from your experience in Indonesia, can you tell us what changes you saw to people's behavior during the pandemic, and whether you think this is a trend that will stick?
No, thank you for the question. I think the three things. One is that the pandemic, or hopefully it'll be endemic soon, really result in a restriction of movement. And there was a lot more demand for, I think from the Gojek side, a lot more demand for food delivery, which actually supplement a lot of the income for the riders, because overall transportation obviously went down because people are not going to work or going to school. And so that kind of behavior, ordering food, actually really took up in last year in Indonesia, especially in the major cities. I think the second observation is that in terms of e-commerce, there's also a big focus of every daily use goods and groceries, which is why JDID actually recently last year launched a nearby store service offering, whereby if you go to the app, you just type on nearby stores and actually you can actually get groceries and daily use goods directly from the convenience store nearby to your place, and then obviously be delivered by Gojek riders, which is a different way of logistics. I think the third thing overall is that at least in JDID, we are really first and foremost very focused on the retail, on the local supply chain, and we're also doing a lot of omni-channel, and obviously we still have our marketplace. And we can definitely see the growth of usage of e-commerce across all categories, not just like the 3C consumer products, but really the groceries and the everyday use cases, and just all across the board. Right now, of course, when the movement restriction is less restricted, you can obviously see that people are obviously wanting to go back to the shopping malls. For those who live in Indonesia, shopping mall is a big thing in Jakarta. And I think that will not go away, but I think definitely the change of behavior. There are many statistics out there that talks about how certain percentage will actually still remains. But our observation is that the growth of the purchase online for the groceries products and also everyday products is actually quite sustained, and actually surprisingly still going on strong among especially even in the Jakarta and the different cities area. So I just wanted to share these three observations for every. That's all I will share. Thank you.
Got it. Can you also just touch upon the difference between the cities and the rural areas? Because I can see how people can easily adopt digital technologies in the cities with the infrastructure relatively in place. Whereas in the rural areas, you haven't really got a penetration of e-commerce. Even Gojek, Grab, those kind of systems aren't that much penetrated in the tier 2, tier 3 cities. So I was wondering if during the pandemic, you saw a more tick up in adoption of digital technologies in the rural areas as well.
Yeah, I guess depends on how you define rural areas, right? So if you define less urbanized area as the tier 2, tier 3, or the smaller cities area, there are definitely still e-commerce activities. If you think about it practically, the beauty of what JD.ID does is that we provide authentic product at a very competitive price. No matter whether you stay in a small town in Kalimantan or you live in Jakarta, right? And because we have invested in at least, I think, 13 warehouses across all the different parts of Indonesia with our own logistics capabilities, actually the products, because we are a retailer, the products actually sits in a warehouse, let's say in Kalimantan or in the outlying islands. And actually when someone wants to order it, they can, and the product is there, they can actually get it within the next day, which is unheard of, right? Getting authentic product. If you haven't been to some of the smaller cities in Indonesia, the assortment of good quality, authentic product at competitive price is actually quite limited in the offline channels. So fundamentally, it's not really about the pandemic, but it's about giving good value to people who wants product that they can get it from Jakarta, even though they live in some smaller cities elsewhere. And I think that's really value creation for the consumers. I think building on what Aaron said, right, at the end of the day, is about improving the lives of the consumer and making sure that they can get what they need, where they need it, and when they want it.
Thanks for that. It was really interesting. I just want to move our discussion to the regulation side of things. So obviously Indonesia has been quite notorious for its tight regulation on a lot of things, both written and unscripted business customs. But it's Jokowi, since he took office in 2014, he's been known as a reformer. He's trying to deregulate the economy, trying to deregulate so that it's easy for companies to do business. And it's also just around a year since the controversial omnibus law was passed through Parliament. So with that in mind, Sachin, beginning with you, what are some of the challenges that you face doing business in Indonesia, and what advice would you give to the Indonesian government with regards to doing business in Indonesia more easier?
So, Shotaro, I guess I'll be able to provide perspective, a sort of an investment perspective based on our experience so far. We've invested in sectors such as logistics, such as financial services, agriculture, and in many emerging markets, these sectors are fairly protected in nature. That being said, we've not had any issues whatsoever when we've made investments into these sectors. And of course, there's a whole ton of legal and structuring due diligence that goes into making these investments. And generally, we have felt that the sort of regulatory environment is pretty accommodating and is pretty forward-looking as well. Are there pain points today? I'm sure there are. And I'm sure operators, Aaron and Meng will be able to provide a more nuanced view from an operator's perspective. From an investing perspective, it's generally been quite seamless. And I think what gives us a lot of comfort is the policies in place, the regulators in place are very forward-looking. And, you just look at the IDX, for example, and how they are, pushing through sort of local IPOs, and on the fintech side, whether it's with, OJK and some of the efforts there, even in sort of like, more frontier segments like crypto and blockchain. So in general, we are sort of, we've not experienced any pain points. It's been fairly seamless for us. We think that the thinking and mindset today is forward-looking. So yeah, those are some of the perspectives I can share, really, based on the experience that we've had so far.
But maybe this is a bit of an unfair question to ask you, but you obviously invest in other countries as well. How does Indonesia compare to those other countries?
So yeah, we've invested. Indonesia has been our core focus in Southeast Asia. Over the past year, but we're obviously doing more in markets like Singapore as well. And we all know Singapore is an extremely, it's a financial hub. It's an extremely easy place to do business. But you'd be surprised, even looking at sectors like fintech in the Philippines, like the regulators are so advanced. In a market like the Philippines, they are so driven to drive financial inclusion that a lot of the red tape, a lot of the bureaucracy that you would expect, you don't really experience today. So we are obviously branching our sort of wings and network across Southeast Asia. And frankly, Shotaro, I would love to give you an instance where we have looked at a segment and we've said we can't do it because of regulatory concerns. But that has not happened so far. And we have looked at, and as I mentioned earlier, we have a pretty broad mandate. And I think that's just, it's refreshing, it's exciting. It just means that, that more and more investors are going to get comfort and, in doing sort of more across the region. So there really haven't been pain points that have kept us awake at night from a regulatory standpoint.
Got it. Aaron, what about you?
No, I generally echo what Sachin mentioned, which is I think actually personally I feel that the Indonesian regulatory environment has been fine. I unfortunately operate in a lot of regulatory oversight area, right? So for instance, one of the biggest differentiation with us versus any competition and for that matter global comms is that we operate across the entire spectrum of the business. So not only do we transact vehicles, which is by itself a protected trade, by the way, we also offer financial services, right, including insurance, warranties, loans, after sales, which I think categorically, if I'm not too mistaken, I believe especially the financing part of stuff, these are all entities that are highly regulated. It took us many years to get the license and stuff like that. I think all said and done, I'm not in a position to recommend to the government to do anything in that sense because I think the government knows what they're doing. And I must say that under Jokowi's leadership, it has been actually easier for me, from my standpoint, coming in as a third-party investor nowadays, that BKPM, their ACRA equivalent of Singapore has been pretty open and for that matter has made opening and running businesses easier, right? But if there's one thing that I may comment, I think the question is whether there can be a further opening up of foreign restrictions on ownership, right? I say, for instance, in lending, I believe the financial services license can only take up to, 49% foreign majority. Anyway, I can't remember whether that's true anymore today, but I know for a fact that trading licenses, i.e. if you are trading vehicles, you do need a foreign majority, local majority ownership. That I'm pretty sure. And on that note, for us, the good thing is that we have local co-founders. My co-founder in this case, Aditya Lasmana, he's born and bred Indonesian. I met him when I was on my scholarship in Carnegie Mellon, right? So we were housemates for many years, and he started a company with me. And so as a result, we were able to, set up a structure whereby it's mostly Indonesian owned and stuff and whatnot, without too much need to structure around things, let me put it that way, because it is a local majority entity. Local Indonesian entity. But I think, we are lucky that way, but I wish that, if Indonesia, if anything at all, I can just add again, really, I just wish that they can open up foreign restrictions on ownership for certain sectors, which honestly sometimes doesn't make sense. Right? For instance, in auctions, right, Lelang by itself, you actually cannot allow for foreign ownership, majority ownership in that sense. Yeah, but yeah, these are my 2 cents. But otherwise, I think that Indonesia has really, really improved just within the last 4 or 5 years by itself, right? So I think that by itself, the current administration deserve credit for that.
Got it. Thanks a lot. And Meng, can you touch on that as well as some of the issues surrounding e-commerce and the Indonesian government? A couple of months back, the Indonesian government was telling the e-commerce platforms to focus on domestic products, and there was a bit of an issue surrounding too much Chinese products being sold on Indonesian e-commerce platforms. That became a bit of an issue. So as a Chinese company coming into Indonesia, have there been some challenges that you faced? So you're not on mute, but we're not hearing your voice for some reason. So is it just me or Sachin? Can you hear him?
Nope, I can't hear him too.
I can't hear him, Shotaro.
Can you try speaking again? Nope.
Maybe refresh your screen or something and then we can. Yeah, I think he's reconnecting.
Yeah. Sorry to all the people tuning in. We'll just wait for him to rejoin us.
The perils of doing this remotely, Shotaro.
Yeah, totally.
The technical glitches.
Can you hear me now?
Yes.
You're back.
Yeah, so,
Great.
Yeah, so just a couple of points. I think one thing is that JDID have Indonesian investors and also Gojek or GoTo as one of our shareholders. So one thing is that we are very cognizant of the local regulations, and we obviously will adhere strictly to that. I think based on what Sachin and Aaron have shared, definitely in the last few years we have seen a lot more. I think the intention of the Indonesian government is to create jobs and to improve the economy, and they do it in a way that allows entrepreneurs and allow companies to continue to be able to hire at the right rate and to be able to increase productivity, right? So we're all very supportive of that. I think the conversation they are raising is not really about Chinese product or non-Chinese product. I think the focus, and I've actually have the privilege to attend the World Economic Forum Region Action Group, where I think the Minister of Commerce was actually also sharing their perspective. And really the intention is to make sure that now the Indonesian local SMEs and are able to continue to produce product that they can actually sell effectively at the right price. And the concern was that if there was a lot of cross-border product that are depressing the market too significantly, it will not be healthy for the local population, especially for jobs, right? And I think for JDID, we totally understand that a large amount of our product are actually sourced locally from local supply chain, local suppliers, local manufacturer, and obviously local businesses. We do have cross-border products which are usually higher value in terms of average order volume, or average order value. Obviously, certain type of brands or certain quality that may not be yet accessible in the local market. So we are trying to complement that because we are at heart a retailer, so we have the kind of ability to kind of determine what kind of products we want to bring in. So we are quite cognizant of that fact. And you can see even in our markets in Thailand, working together with the Central Group, where we tap into the Central Group, which is a large retail conglomerate supply chain. It's also the same philosophy, right? But at the end of the day, we are able to provide better customer service, faster logistics, and also wide assortment of product and competitive pricing to the customer. So that's kind of the differentiation, which really did us well in China. As the China middle class grew and JD.com grew, we invested in the logistics. So I think the same philosophy of customer service and customer focus never fails any companies.
Got it. Thanks a lot. We have around 3 minutes left, so just try and take a couple of questions, quick fire ones. Seamin, do you think e-commerce platform in Indonesia is moving into a more healthy competition? Have the giant mergers disrupted the market? I'm assuming this is talking about GoTo and monopolize the market.
Yeah, there's actually like 3 questions, right? So I kind of like just very quickly. At the end of the day, the e-commerce space in Indonesia, if you take a step back in 2021, actually there are different ways. There's obviously the C2C, the marketplace, like JD.ID is moving into omni-channel. We just opened a number of consumer electronic shops offline. We are working with all the convenience stores. So I think there are different models evolving as time passes, right? To one, improve the whole dynamism of the retail situation in Indonesia, and as consumer are, as we talked about in the first part, becoming more and more used to kind of online delivery or even going offline and then buying stuff and have delivered to their house. So I think this is a natural course of evolution. And the second part is that I think with GoTo, obviously it's very clear that GoTo or other mergers that's taking place at the end of the day is to be able to continue to provide more use cases for the consumers at the increasingly competitive pricing solution, right? So I think I wouldn't use the word disrupt the market. I think what Aaron was saying, rather than using the word disruption, is really to improve the life of the consumers. I think for us, for JDID, JD.com, Southeast Asia, we are always working with different partners, and we also have made various investments in the past. So we are all very open to commercial collaboration, strategic partnership, because we believe strongly that if we want to continue to thrive and continue to do well in the local markets, you really have to work with the local partners, and you really have to plug yourself into the local ecosystem. Thank you.
Got it. Thanks a lot. Question for you, Aaron. Can you share any plans, updates on your listing? Will you look at the SGX or will it be in the US? What timeline?
I mean, the plan is to do it in the US stock exchange. We might do a dual listing at some point. Unclear when in the dual listing side of stuff. But I think for us, is like what I always tell the media, it will be market permitting, 12 to 18 months. Yeah.
So you don't have a concrete timeline for listing in the US yet?
No, because I mean, we're not in the rush to do that. Number one, because the company is well capitalized. I guess more importantly, really the markets. We do not know what's going to happen to the market, so we don't want to be pressured or forced to list in that sense, because we just do not need to do that at this point in time. I think that it is more sensible and more responsible to our shareholders to do it when the company is ready. But all I can say is that we are already being readied at this point in time. But watch out for something within the next 12 months or so. That's my guess.
Got it. Thanks a lot. Sachin, maybe you could take the next question. How do you see the trend where quite a lot of Indonesian startups have their companies registered in Singapore? Should it be better to, is it better to be registered in Indonesia in the future?
Shotaro, I think that's, I'm no legal expert, but I think that, that has to do with structuring. I think a lot of funds are domiciled in Singapore. So hence, it's just easier from a fund flow perspective. But I'm sure as the regulatory environment shifts, you will see, potentially more companies, not having their holdcos in Singapore, but just having them purely based in Indonesia. Don't see any issues there. I think it's just a function today of convenience and structure.
Got it. Thanks a lot. Our time is up. So with that, I'll end the session. Thank you, everyone, for tuning in. And thanks for all the panelists for your valuable insights. See you next year, I guess. Bye.
Thank you.